Well, that's it for the music. Welcome, guys. My name is Sam from Trade to Prosper. I'm here to give you my perspective, couple of scenarios that are likely to play out, key levels in terms of when to start scaling out, I suppose, and when to get out. There are various scenarios in this. I thought we might still play a bullish scenario, but I'll go through that. But we need to figure out what to see before we do that. It's not all bearish yet, but it's an opportunity that some people didn't take advantage of. I'm shorting a few. I'm also holding on to a fair bit of coins. I've got some that I came in late, and I put my stop losses. I don't know what the situation is there, but you need to put stop losses if you haven't. And when you have such a key level, it's good to raise your stop losses. Anyway, let's start with what the news says. What was it causing it? And there's a good tweet here, and basically it's saying that the markets are now pricing a 24% chance of a 50 basis points for the Fed. So the economic results are looking good, which is not, and the inflation rates aren't dropping as quick as they can. So they're anticipating that the Fed might raise interest rates because the economy is good, job employment results are good. So they have the luxury of raising more interest rates. And I think that is pricing in the rate increase, which means that stocks will drop. And then and you better to be in the cash rather than in stocks, because stocks are pretty much more risk. And I think if we have a look at the bonds, let's look at 10-year yield or 20. Let's look at bonds, the 10-year. Let's see if that, so it should be the opposite direction. If the yields are going up, so this is the daily. We've also approached a resistance level as well, so interesting. Let's look at the 20. Question is, am I getting live feed? Probably not. 20 hasn't changed much. This is the weekly, so and obviously I'm not going to get live. Am I getting live? Yes, probably live. Let's look at the daily. Okay, that's not going to make much difference, but it's close to support. And the 10-year, is this live? Probably not. 10 minutes ago. Can't look at it closer. So we did break out. So it's been bullish for the last 24 hours. So the last 12 hours, it's probably come down a bit. But that doesn't mean you can't keep going. All right. So let's look at the Dixie. The Dixie is not really doing much. So it is just basically the stocks are dropping. There's no other thing that's pushing it. It's just about the news. And there was a news from one of these guys also saying the same thing. So let's have a look at, we've talked about this. So S&P 500 has been dropping strongly, and that's correlated to Bitcoin. And we have our key levels. And if you look at this top right chart, we've talked about these moving averages, strong moving averages, and there is a double top. So that was a position of shorting. Coming to the 618 level, previous support, but is it a strong support? Don't know. These indicators show that the volatility is going to go up. We talked about that, and we correlate that to previous pivot points. So that top is a pivot point based on this indicator, the volatility indicator. Looking across here, the up 4-hour chart, we can see that for the past, since, when is it? Thursday, last week, pretty much, 16th. It's been dropping. So Bitcoin's been holding up well. It's just couldn't hold it up anymore. So we've got these moving averages that should have, could have. So what we're looking for, yep, it's past a moving average, but this 0.5 Fibonacci, it could just a bit of a sweep to the bottom and then back up again. But that's the issue there. We've come past the key level. So this might just come down all the way here, or this pocket, before we get a reversal. But it's still in a range. So there's no way of knowing how to be bullish or bearish at this point for that. Now let's talk about Bitcoin and what are the key levels. So let's go to a big chart. Where is this one? Okay, that's one there. This is the chart that I want to look at. On my right, we've talked about this in some previous. These moving averages are pretty important. And if you look at the history of this, we could look at these moving averages. These are strong moving averages on the weekly. And you can see the 30 weekly moving average is also equivalent to the 200 daily moving average. These are important. We broke above it, got the retest, and we went up. So in terms of when to go bearish, is realistically, this is a weekly chart. Okay, so if you know the basics of trend, we have a trend on the weekly, and why it went bullish is that so we got our highs, we go lower. So what we have is lower lows, keeping getting lower lows, and then we got a lower high. So we broke that trend, right? So the moment we break that trend, it's bullish. Now this high and this high are equivalent. So to become bullish, we need a weekly to close above this, and we haven't done that. And there's a lot of reasons, especially this moving average, the 50 weekly moving average, and we talked about that, as well as that there's a 200 moving average as well that comes across like that. Both of them acted as a resistance, and therefore, and also the previous high, the weekly high there. So the weekly high, we did not close it. The weekly high is based on the end of the candlestick, not the wicks. So we measure the body of the candle, and we did not close above it, and we don't want to close below this on the weekly. So we still got a few days to go. It would be nice to close above it. So even if it wicks down here and goes back up, that's a bullish sign and a bit of confidence. So we're going to look at this level here as it comes to. But from a weekly perspective, if we lose this weekly level, which is also funny enough, the most important moving average from a few strategies, but that is the weekly moving average, and that's the weekly level. We lose that, we are going to go down deep. I will be looking for those areas. Then you segment the whole thing into different levels, but we do not want to close a 4-hour or 8-hour below this moving average. What it means is it's opened the door for more lows. It doesn't mean it's going to capitulate, but it does mean that it's negative and we are likely to see lowers, more lows. So that weekly level is very important. For the time being, that's a weekly, we're on the daily. So if we look on the daily chart, this one here will be good. Yep, that's the week daily. So our daily chart and the daily level, if you can see, our trend, we have our daily levels, and we kept going higher with the daily higher highs. The daily obviously is very volatility, and so at the moment, if we lose this daily level there with the bottom of these candles, it can still come down. Long as it goes back up, we haven't lost it. So having a wick, if we don't see a daily close below it, then it's positive. If we see a daily candle close below this, then the weekly, we move to the weekly chart, and that really means that we're going to come down lower. Now, that's from the trend perspective, and that's what I want to make sure that you understand the levels and you'll get out. Your absolute worst case scenario is this level here. If you lose that level, and I believe that was the weekly level right there. Yep, that is a weekly level. If we lose that, then, and if we have daily one close below this, it's going to go down deep. Now let's talk about a few other things. Small time frame. So we have this trend line, and it could act as a bullish scenario. If I can get the pen, we've got this level here where we saw that level of confluence, and we are just below it. If we look closely, it probably act as, so what are we on? We're on the 8. Let's look on the 4-hour. So we've got our 618 level, Fibonacci, that's holding it up. If we'll do that, actually, let's go to another chart. Let's look at a chart that I've been going through, how to trade this. So we've spoken about the key levels. Now what we have is trading opportunities. Okay. So let's just space this out. Our daily levels there. So we'll get rid of that. And what we can do is get the parallel channel and just draw it down. Make it horizontal a bit, that'll be nice. And you can find the middle. And you can see how pretty much lined up. And then we've got this one here. So what we do is we just get that middle of that, put the channel and get the middle of that. Let's just do that. So when we break that level, obviously we dropped. I was hoping there was a bounce, but there was no bounce. Now, this is going to sweep the bottom. Now, the trading method here, let's just get the pen out properly. Let me just get rid of these drawings. So we're likely to either get this and get a support, or this range here. We might get some wicks. Now, if we come down below it, and then we find that we come back up, go long. That's when you find your signal to go on. This can be a swing trade. So if we come down, swing down, and then we find a wick that comes back up, go long. So you find your entry there. Let's do that again. So we might find a bounce, swings down, get some liquidity there. People that went long here will have the stops. They will probably get those stops squeezed out. And then, so what happens is those who have the stop losses will force this to go up. And when we go up, that will be your signal right here. We want to get above this candlestick on the 8 hour. And so if we wick down and get above, beautiful. If we see something that doesn't match that, then we're going to look at, let's get our Fibonacci. Then we look to this level, which is right on that level there. That's the next level there. So we might play that scenario where we come down, wick there, and then get back up, because that's a lot of demand. This is the chunk. What I suppose level of control, volume control. So if we were to get our indicator on volume, and we just do that. Okay, that's right there. About there, exactly the 618, perfect. So we might just get that, and if there's the demand's strong enough, it will force it back up, and in a likely scenario, this could continue up just to these levels again, and it wouldn't surprise me that it could do that. Just give me a sec. I have some notes I want to just look at. So that's pretty much what I got right on my notes. So what I want to do is probably get that there, that level there, because that could be possible anywhere in that range. And then we that is a bullish scenario, guys. Bit of a fake out. Now what does that mean from the SP 500 perspective? Where are we? Let's see, how likely is that to happen? I'll just close that. SP 500, and it's a good likely scenario because we are looking at support here. So this, we might just wick down and then back up again. So that is a possible scenario as well. So it does line up with Bitcoin in that case. Even if this wicks down here, we got that moving average 0.382, which is pretty much the 618 inverted. So at this level, or the 0.5 this bucket here is a good level that we should find some support, and it might just go like that. Now, again, very aligned with Bitcoin. Bitcoin had its 25K resistance. This knocked on 1, 2, 3, 4 times pretty much on this level, and Bitcoin knocked on that 25K level as well. So they're aligned. And similarly, if we see something here with support, then we are likely to find the same with Bitcoin. So if we get to see this, keep an eye on that. If this moves, Bitcoin is likely to move as well. Or as long as this doesn't go anywhere, if it goes sideways, you might give Bitcoin a chance. Right, so that's that scenario. And for Bitcoin scenario, if this goes above like that, we're going to hit I think 26K is dangerous for me. That's a danger level. And we could still come back down. If it comes back down and below this, I'm afraid that's not good. That's a fake out, and we could go really bad, because this level is a key level. If we break above it and not hold when it goes to the retest, you short it, and bad luck. This is likely to be the top, and it sort of fits into our trend line as well. So if you look at that trend line, give it take a bit, it's likely to do that. And I'm going to give you a reason why this is a dangerous spot. People are bullish, but this is a dangerous spot. And I'll explain why. Okay, so if we look at the charts, a bit of psychology here, and I'm going to explain it. Some people do a better job than me, but I'll try to do my best. When we had this rising wedge over here, and you can see that played out pretty much. What was happening is that we had a selling climax that just dumped big time, pretty much oversold conditions. The whales, or not the whales, retail, whatever the case may be, they bought it up, and they start average selling off as this approached the 618. I think that would have been the 618 from there to there. So the 0.5, as it approached the 0.5, so dead cat bounce. And what they do is they start taking profits. People buy the dip, start just unloading, and then maybe the bears are just coming into it as well. They might not be unloading. These ones are not unloading, but the bears are coming into it, and it took a while. How long did that take? Give us a look. So from there to there, it took, close to a month, 28 days. So that was a real strong resistance, and that correlates to here, right there. No different. That was our main resistance. Now, if the shorts were coming in there, the bears were coming in, they would have, most of them will put their stop losses above this band, I suppose, just above that. So one would think that the whales, they will know this gap, that the shorts are here, there's a lot of liquidity there, and these guys, the whales came in and start consuming that. They're going, okay, where can we make our money? These are the guys that we're going to target, because we know there's a lot of liquidity there. For a month, they've been shorting, and so they're the ones that are going to buy the short, stop it, the squeeze. They're going to be squeezed out. So I was expecting that to be. So if price does come up, they're going to probably unload here. These guys now, what they will do is they'll be stopped out. So stopping out shorts is basically buying at a higher price. Did they get shorted out here? Don't know. Did these ones here unload here at this level and not focus on that, but just focus on this? So the bears came back in, shorting. But these guys might go, okay, we didn't have enough time to unload it, so we need to unload it here. So if we start seeing it struggle, that's going to drop it down. So that's how I see it taking place. That's one scenario. And we can measure that with this. Now, if we look at our Fibonacci, let's go to the daily. Let's just clean this up a bit. We go to the bottom. We have that there. You can see a 618 level right there. So this 618 is roughly 26,000. So it's not much above. And so 26,000, it also has confluence with this Fibonacci as well. And we didn't quite hit it yet. So that's what we got there. Okay, they're the parallel channels, all right. So that's how I look at it from a psychology perspective. Let's get cleaned that up a bit. The 26K, if we could get past the 26K, if we get the scoop there and we continue on and break above it, if this could hold and break above that, then we're looking at 30K to 40K. So this will be the next Fibonacci that I'll be looking at. And then this level of 1, which is the meat of that, and then we'll continue on with the others. The measured move for this, so this is a measured move, and we can look at that as that level there to the 40K level, if that measured move plays out. But there's caveats for that. So this is still in a choppy area, and there's a number of scenarios. Unfortunately, you've got to be very game to hold your coins as well. But let's have a look at it. Let's look at a few scenarios there, and I'm going to give you reasons for it. Just want a clean chart. Okay, let's watch which one can we use. Okay, a lot of people have been using Bybit. So there's a reason for Bybit. Apparently, the open interest and the order books aren't manipulated. So there's a few people that like Bybit's truthfulness in terms of its price action. Now, when we look at this chart, you can obviously see that is a clear resistance level, and that's our bottom. We have our Fibonacci. We can use the bottom, use the top as 1, and you can see a whole bunch of levels. So when price came down, the 618 was a nice scoop. So now we're looking at this level for price to find another level of a bounce. So that is equating. Let's look at it closely. That's equating well with even here could be a good price, because that is previous resistance right there. And we're on the daily, so let's look at on the 12-hour. At the moment, too early to say anything. And then we've got this price action here. What do I pick that spot? That is the initial buying climax, and then up. So what we had here was pretty much a head and shoulders. We played this level out, and we found its target, head and shoulders. Now, what I've seen others do is we've got this channel as well. So this level might be a good area of support. The question is, would it drop like that? Because there's a whole possible scenario where we always use our 618 level, and you can see where certain things could be resistance. And if this is our channel, if that's our channel, we can split that into half. Too thick. Oh, that's the middle one. Okay. Got the wrong one. That's better. So the channel has its own Fibonacci levels as well. So we just need to keep an eye on those. Let's just do that. So that channel is playing out, and it wouldn't surprise me that we can still go above and then continue on. And as I said, this 26K level here, it's also matching. So if we go back a sec and we measure our Fibonacci from there to there, you can see the 618 matches those levels as well. It's got confluence. So let's just do that gold. So when we look closer, if this is our range from bottom to top, you can see how these Fibonacci's are aligned with that 618 level as well. So that is an area that we need to be cautioned. This channel doesn't mean it's playing out, but it has confluence. The other aspect that we've talked about, if this is a bullish scenario, this is our left shoulder, this is our right shoulder, head, and what can take place is our right shoulder. So even if this comes down to here, it creates the right shoulder. And this is our reference point. So it's an ugly one, but it still plays out. And that's how you have a big measured move. Now, the bearish case scenario is a bit scary. And I'm going to bring out a chart. Give me a sec. And I'll need to bring it out. Give me a sec. Actually, this one here. Here it is. So what I'll do, just give me a sec. What I want to do is bring it across, if I can. All right, cool. Bit of a lesson here. Let's just get rid of that. Now, what we're looking at is the big picture. So we have these Elliott wave counts. And what we have is this top right one, and we've got this top bottom one. The bearish scenario, as you can see, we've done that. So we've come down, we hit our level, which is A. We've played our ABC, which is that. We found our B right there. And we played our 5 wave. 1, 2, 3, 4, 5. One can argue that is 3, 4, 5. Now, if we don't break above that, you get this move all the way down and further. That's scenario 1. That's regular flat scenario. And so far, this fits into it. The other one is this one here. Remember I was talking about it breaks that level, but it goes a bit higher and then drops. So that is my area of concern for this model to play out. This model could play out. And so if it does drop below this level, that is my signal to go long short, big time. And I did explain in terms of liquidity that if the whales came in, if the whales bought this and their target is to get this guy's liquidity because all the short stops are there, they could easily unload it there because they're prepared to buy and these guys are prepared to sell, if that makes sense. So that is a scenario that is possible. The other scenario is that these guys, they bought here, unload a bit of it here, and that's why I kept on dropping. And they might be waiting for more to come, and they just keep unloading and unloading, and they don't really care about this one because the stock market doesn't give them that luxury, but they're willing to unload in this area. That is very possible. That is something in the back of my mind because many times in the past, I'm thinking that's a key level. It should start flying. It should start going. It's very possible, but at sometimes it's a fake out. And so I'll give you the scenario where that neckline, if you drop it, it's a signal too short. So that's what I'm looking at in the big picture. Now looking at here, let's go to my notes. Excuse me. So the best scenario for me right now is this here. Give me a sec. We have our range right there. We can get rid of these parallel lines. You got the idea from it. This range, like we said, is a nice area to buy because it's in the thick of things. And so the top of that, maybe we'll just do this here. Right there to the bottom of that is our area of interest that we'll find demand for sure. So I'll be looking to go long if it comes down here. And it could be very quick. Yep, bang. And the signal, you can take your chances, get the wick, and then take your chances having stop losses very tight under the previous wick and see how it goes. So that could happen. I would suggest that you look at this and find out what's going on with it at the same time. Because right now, it's finding some 4-hour, these are 4-hour charts. And, okay, CME gap, interesting. I should look at my CME gap chart as well. Let me bring that out. See if we've got any gaps anywhere. Mode. There we go. I forgot about these gaps. Oh, look at that. There's a gap there. Anywhere else? No, that's it. So we do have a gap there. Interesting. That Doesn't fit our model though. That's nasty. If it comes down there, yeah, you never know, it might get filled out. So that is the gap that might get filled up. You can see how this elite wave count, wave 5. The other one, actually, the other thing I forgot to mention is the weekly and the monthly. So if we go to the weekly chart, and we just actually might just get that ray. There's our weekly level. And we have our other weekly level roughly there. That. We've got that. Don't need the top, it's pretty clear. And now what we're going to do is get the monthly. You can see on the monthly, we don't want to lose a monthly level either, or the open of the monthly. So our monthly level opened here, so we don't want to close on the month below it, that's for sure. So that's our monthly level. And our previous month is over here. Same. I'll leave it at that. So when we go back to our 4-hour chart, that's our weekly. Let's make it thick. There's our monthly level. Let's make that black. Actually, purple will be good. And this is our other weekly. And now we can see how these levels are aligned as well. Let me try to get a better perspective. 8-hour chart might be better. So 786, this level, pretty much. So let's just get rid of some of this. You can see how that band is pretty important there. So what I can do is just highlight that band right there. Make it black. And now we can hide these levels. So you can see how, again, even if we do on a daily, that band is perfect. We've got the weekly and the monthly there as well. That's why we got the support there in the past. And we did get our profile as well. Volume profile. Actually, that would be a good idea. So that's on the bottom of that. And then we've got our Fibonacci as well. So if we get our Fibonacci from there to there, and the golden ratio as well. So between the 0.5 and the 618, again, everything points to a strong support level in this golden pocket. Now the question is, how much demand is there? So I can get rid of that. Now the problem is we're going to have this level of that level as control as well. So that could be resistance. And so if price does come down here, the golden ratio is roughly there as well. So If it stops there, great. But if we look at a small time frame, 5 minutes, this is what's going on. It's not the best. Get red. So price is right there. Okay. Doesn't look like one of these ones, does it? It's gradual. It's not a good, strong response. So here might be the target. The other aspect here is if we measure this on the 4 hour, and we saw this pattern play out potentially. If this triangle, you can see when it dropped, there is a triangle there. So that as soon as we lost that, that acted as resistance on the 4 hour and it just dropped. So that measured move, if we were to say that is our measured move, again into the pocket. So that triangle measured move could be in the pocket there as well. Give or take. It doesn't matter how you will see it, it's still the same height. Yep. So that could be the target. Everything's difficult because everything's dependent on, as we know, the other charts. Now, where's my tether? Let's see what tether's doing. So what we have here, and get rid of that, is basically what I just explained. There is this rising. So if we have this channel, if this is a rising wedge, it's not going to be good. You can do this line any way you want. Either way, this is now starting to look like a channel. So if we break this level, if we don't find support there, so let's just put that back. So I had that level of support potentially. We don't know if this is playing out. That's the thing. If this comes down here, let's just forget that. So if we don't get a swing up there, get a yellow. If we don't get a cup shape forming here and continue on, then we're going to drop here, and again, we're going to look for that move. The question, but is that what's going to happen? Because this level was resistance. So are we going to get shorts coming in, bears coming in? I think so. And then we have to see it break above. We need to see it strong. If this was a strong response and just breaks above, then we can retest and go back up. But this is going to be our resistance. Once we break this level, it's going to come down hard, fill our buckets, and then this could be resistance. And then we'll go sideways and then break up. That's going to be hard to tell. The worst case scenario, you can see this scenario, that could play out as well. And then we get this ugly shape that we don't know what to do with. Many people think many different things are possible. We don't know. No one knows. So this scenario is, if you want to cover this bearish scenario, I can. If there's any comments, there is no comments. The bearish scenario, and you need to be mindful of the Wyckoff model. The Wyckoff model pretty much says that we had our selling climax here, automatic rally. This is our secondary test or spring, sorry. So if this is our secondary test level, this is our upthrust. And if the upthrust fails, if we fail that level, we fail and we come down, then there's another two, 3 models to play out. And those models I can show you to you. But you can see this broadening wedge, this macro broadening wedge, and this could be the target. This is also another model that you can go from there. It's a nasty area, so if we lose, get out. If we lose the 618 level, that level there, get out. That's my advice. Not financial advice, but that's managing your risk. If we lose that level, that is the weekly level, then you can see this playing out. So let's have a look at quickly, what am I talking about? I'll show you. Give me a sec. So these are the models I'm talking about. So if I was to get that, copy, oops. So this model is aligned. So what we've done, this level is that, this is that, is this what it is? That's what we're looking at. This model just does that, and it's going to be easy to see, figure it out. So if this comes down and we start seeing it not going down, it sort of matches that level or even higher, maybe the 0.302. If we find support there, let's just play that out. So I'm looking for this level of support. If this was to drop, either here, that would be nice. As long as it stays above that. If it doesn't, then we've got these levels to worry about. Somewhere in here will be the next one, and then up, and that plays that model. The other model, actually, I put the wrong highlighter. Okay, so accumulation, where is it there? It fits with that model as well. So the accumulation model, these are the ones, actually, where is it? No, not on this one. Where is it? I got rid of it. Oh, that's not accumulation, that's reaccumulation. Sorry, guys. Got the wrong page. That's the other model. This is the worst, second last model. Where do I put it? Okay. So we can hide that. This particular model, you can see where the spring is. So again, that is our area. We play that rising wedge, that secondary test level, and our spring. Spring could be anywhere here, even below it, slightly below it. But they might just push it further down, and we might hit that level there, the 12K. There is worst case scenarios where, because what we're looking at is, this is wave 3, wave 4, and wave 5 could be much further down. So again, we're looking for this accumulation model, but no one can anticipate it. But if it does come to that, at least you have some idea what you're looking for. Get out get out of there, and hopefully it comes down more, and then start averaging in. But that's what I got from that perspective. In a small time frame, let's have a look what's happening today, right now. Not the best, is it? So that played out. When you look at this, where is it? Don't need that now. There's no green candles. It says dropping. That's what played out here. You can see on the right chart, we had our support, another support, and that was trying to act like support. And when it came to this level, it used this as resistance, and now it's dropped. Now it's going to look for there. That is bearish. So it wouldn't surprise me that we go lower. Even if this comes up, it's going to struggle. I don't see it going. I would be looking at potentially coming back down again, but it couldn't do that. But yeah, I see this coming down lower to that level that I spoke about before. That is the meat of it. Maybe even further down. But it's looking bearish, guys. Here we go. Our monthly and 2 weekly, it's coming down. Bummer. Let's hope it's not the end, but you can see that those wicks, when you get a rejection, so when you look at the charts, when we had a good rejection, you can see how it dropped. But that was a grind. You can see the lower highs overlapped. Each one overlapped the previous high. So that was a grind. Here, that was a strong move. That's what's interesting. So just not enough. Let's look at Ethereum. Let's see where we go. What's NIR doing? NIR still there. Okay. I'm not really interested in HBAR. I was just looking at it. Gal's not doing well. I'm thinking it might bounce from there. Still no good sign. I'm probably some of my shorts. Let me have a look. Did I buy back? Yes, I did buy back. I was shorting, so 46. Are you kidding me? I got it on the wick. Let's hopefully it does that. Anyway, I closed my short. I thought this is glimmer, so I thought, yep, breaking this wedge. Can we hide this? No. What's going on here? Let's refresh that. I'm missing this stuff. That doesn't look like that's going to go up further. Unfortunately, when you break that, it's a swing failure trade. I came into it late, but I still took the short. I don't know where it's going to end up. Could come back down here as well. Let's see what other charts that we have. Let's look at Ethereum. Actually, let's look at the rainbow chart. So we had, it's still pretty bullish. Even on the weekly, it's still, the indicators don't show weakness, really. It's still early. Like, I'm looking at this indicator, it's nowhere near coming down anytime fast. Still got a long way to go, I think. We've got bearish divergence here on the weekly RSI, so that's playing out, and you can see how my levels are on the weekly. MACD, we don't want to see the MACD crossover, but we want to see it come up anyway. So still looking all right. So that's what we had, that as a support line. The weekly trend line, that was support. It's actually broken above. So what's good about this is previously, if I can get that line out there, right there. Okay, let me clean that up. So this is our, see this green one here, this one here, that's our weekly 50 moving average. It stopped at us here, right? But historically, when we got above this channel, you can see we were here for 1, 2, 3 weeks before we went up. We only got there 1 week. So it's a volatile area. Volatility is there. It took 1, 2, 3 weeks, and then we broke up. So if that's a fractal, that's pretty much it. And when we broke above it, above the 50, then it kept going. So when we look at the indicators, let's just close these ones. MACD, no. You can see with the indicators that it is a good bullish breakout. So we had a breakout from that level, 50%, and we're above the 50%, which is pretty good. We're above the 50% on the RSI. If we drop below the 50% on the RSI on the weekly, that's your signal to get out as well. Because when you lose the 50%, stuff like that, it goes down more. 50% goes down more. This might just play this range before it goes up or comes down from the RSI perspective. So it's worth keeping an eye on. But the main point is, see this trend, this channel, we broke above it, and then we went up. And similarly, we broke above it perfectly, and now can it go up? That's the question. The 200 moving average is basically it. So when would you go long? You go long on the weekly, especially, and then you got your levels. Now let's look at the tether dominance. I almost forgot that one. Let's see what it's telling us. So that's tether dominance. It found support, as you can see. It's not the actual chart that I'll prefer. There's another one. So that's today's results. We got a bounce. So it came down to this level here. So previously we had support, resistance, support, resistance. So we're finding support here. We want to see rejection here. We want to see that rejection. We don't want to see it go up, because this could be a W formation. That's going to be nasty. If it goes above that level, guys, it's basically we're going to go down deeper. And so looking from the tether dominance perspective, we need to keep an eye on that one. That should align with our weekly stuff. So it's come to support right now. So it wouldn't surprise me that it doesn't drop anymore, the coins. If we look at the, where is it? The reds, all reds. Gee, some of them 99% there. CFX lost 18%. Good stuff. Should have shorted that one. So what we have here is previous resistance. There's some wicks that go up there, so we might get a wick come back down. But I don't like this shape. It does look like a reversal shape, this stuff here. This is a typical reversal shape. Doesn't necessarily mean it's going to happen. It could still range, like here, but we haven't broken the range at all. So let's look at total market cap. See if that's telling us that we're going bearish or not. Total market cap looks very similar to Bitcoin. Again, here we go. We've got our levels. So that level there is perfect. That's from the previous market cap. So that was our resistance on the way up. And then we got support. So we don't want to see that happening. But total market cap. So the money came in, flowing in there. But total market cap wise, money hasn't been flowing in. And it doesn't matter which alts are going up, it's just money is moving around. So until there's new money coming in, no good. That was a clear break, as you can see. That was a previous resistance, and that's bullish. Now, if we look at this, it's actually very similar, isn't it? Previous resistance, it came back down. So we want to see it go above that. We want to see, this is the weekly, okay. If the weekly could go back up, that would be really nice. But that is, again, it's aligned with everything that we see. Even the RSI there. Actually, let's look at, it might not make it there now. Still, who knows? It's not looking promising. We've got time to decide to jump in or not. So what we're looking for, guys, if prices come down, you find a level. If it breaks that level, you go long. That's a nice swing trade. Here we want to see, doesn't matter what it does, but we want to see, that's the level. It needs to break that level there, in my opinion, to go long. So if we got, so if we get a bounce and get a pullback, because that's where we've seen stuff there. Like if you look at it closely, the wicks are there. This is where the wicks are. So that's going to be our defined level. So let's just map that out on a small time frame. Small time frame, that's our resistance. And let's do a Fibonacci as well. You have the golden ratios there as well. Let me just change this to white. Make that gold. So that's actually the other way around. 382. Then we've got that level here as well. Because we've got our wicks. We've got a wick there and we support there. So this might hit that. If it comes back down, which I think would, But if it breaks above this level, it might just come back down. Yeah, I'll be looking for this level, guys. That level to go long. You might want to take your chances, up to you, to buy that in. I'll wait. I want to see some reversal pattern in this range. I want to see a reversal pattern before we go up. Very similar to this stuff here. There you go. It's sort of aligned, isn't it? So this one went all the way down here. So this still could drop a fair bit. That's our level of demand last time. So small time frame, if it comes down there, could be a good entry. Doesn't mean for long entry, it just means a good trading opportunity for long. And you just got to wait and see. But at the moment, there's nothing there. It's just, we're looking at the 15 minutes, and you saw how long it took. How long did it take? Is a look. From there to there, 13 hours. So it gives us a bit of time to look. This was obviously different. That's within the range. This is on the bottom. So the bulls have to come in, and usually it takes time. Look how this one, look how it dropped here like a rock. Look how this one's slowing down, like it's really grinding down. Difficult to say. But yeah, I'll be looking for that level. And then if that fails, we got our levels. Then that's the next level. And this is the main. So this might get there and then drop. And that could be our entry. Damn it, let's look at Ethereum. I shorted Ethereum, not Bitcoin. It should drop harder than Bitcoin, so it's not the right chart. Look how the moving averages play their part. There you go. So 200 moving average. Not the best formation, is it? Does look like it looks more bearish than bullish, to tell the truth, with that. Ethereum doesn't look as good as Bitcoin does. That's probably why I shorted it. The more is it okay? I shorted it late, but still, I do see that coming into play. It's better charts. I'm working a sec. $14.19. That's the one. Ethereum did the same thing as well. Very similar. This one's a bit more bearish in structure because it didn't make highs. So it played this triangle out. Looks like a triangle. That measured move. Okay. So around here. So Ethereum actually dropped that level as well. Okay. So it dropped that previous top. So Ethereum's more bearish. How much percentage did it drop? 6%, all right. It does look like this is going to drop a fair bit. This is very volatile. Well, I'm just wondering if I should take some profit. Looks at 12-hour. So you can see how when it broke up this trend line, you can see the moving averages played its place, even for the Fibonacci, of course. But the moving averages played its place. This one came below it, hit a fib, back up, and this is the main resistance neckline. Damn it. It's just not nice at all. This one. There's no formation that I can rely on. If that's a formation, broadening wedge, that's 50% either direction. This could go like that, or down and up. That's a big drop. That is like 1450. It drops down there. This is bearish. I think this is going to come down a fair bit. So from a Wyckoff perspective, you can see how this plays out. For reaccumulation, doesn't look the best. Automatic response, up thrust, UTAD. Damn it. Can't use any strategy besides formations to trade this. And you can see even that's a trend line. See the rising wedge, and it breaks that level. Historically, this is where we had support. 2 levels there. So I'm looking at this level. You've got the moving average, the strong moving average. I think it's a 200. I've got 2 of them on the same thing, okay. So there's a 200 EMA on the daily. Just make it purple. So if you lose a 200 daily EMA, then it becomes bearish. No different to Bitcoin as well. So here's the last part, guys, before I sign off. What I was hoping for, and where is it? Do we have it here? That's not the model. That's not it there. Give me a sec, guys. This is the one. Okay. So if we go to the weekly, back to the weekly, guys. For those who missed it, it's called the Stan Weinstein model. This is here. Stan Weinstein model talks about distribution, downtrend, accumulation. Here it says a 30 weekly moving average. And this one played out very well. That is our 30 weekly moving average there. As it comes down, we break above it. We find our resistance. And it retested the 30, just like this did here. Comes down, tests the 30, and then goes back up. That's why I'm saying, and it's also the 618 level, that's why I'm saying if we lose this weekly level, it's very bearish. So keep that in mind. We've still got a long way to do that. I don't think it's going to be any time close. But if we lose the 30, that's your signal to get out. But I'm hoping that this model plays out. It makes sense that it should play out. But since it's popular, you never know what the whales are going to do, right? So if we can get past this 618 level, which is about 26k, if we can get past that, I'm bullish. I'll be putting a lot of money in after that. I'll put more than, I think 50 or 60% of my money is already in, but I'm reserved for the rest. If it gets above there, then I'm pretty confident that that's the next level, 618, and if we can get past that, then it's this level here. So this one's coming down, these moving averages. If we get past that, so this is going to be strong resistance, and it might be the case where that's 1, 2, 3, 4, and that's our 5. Then we get a pullback before we do more. That could be definitely a major resistance. Anyway, I'm going to leave that. If there's any questions, I'll move on. Prince, g'day Prince. Let me look at YouTube, see if there's any questions there. No comments? Cool. So Bitcoin Dominance is telling us that we might be alright at this level. It stopped. Let's look at the smaller time frame. Be nice to see a red candle, not yet. Now the question is, do you buy in? So that's looking a bit better. SP500. A bit of support coming in on the 4 hour. We've got 1, 2, third wick. So as usual, it breaks a level of support that you would expect, and then goes down, gets a bit of a fake out, and then back up again. Is it too early to go in? Don't know. But you got to look at the coins that you want to probably average in such times. Let's look at Bitcoin. So there's no wicks there. You can see that on the 5 minute, there's no wicks. So you would expect a bit of a bounce, but there's nothing set up there yet. We've got that level here. If we can break that level, I think it'll be safe to go long. So, okay, so this has got a bit of a support. It's probably going to do that. Come back down. It could do that. That's the concern. Maybe put your orders there, guys. I might just do that. It's there. It might just give us that wick. Just a bit of a short trade. Small long trade with high leverage. That's what I'm looking for. Bit of something like that, and then coming back up. Is there anything else that I'm missing? Could this be anything else? From there to there. So measured move from there to there. Wouldn't surprise me. Be nice for it to come down. Yeah, it'd be nice to just go below that. Expectations on Bitcoin. I've got no expectations. That's the whole thing. You just identify the levels. You can't give expectations. Expectations was this was going to short. This is going to be resistance. That's definite. That was your shorting opportunity. First test, second test, third test, and then rejection. Now, conditions are that as long as it stays above this level, you can keep the long. If it drops below this, I would get out. I think that was our daily level. So we had this level here. Somewhere here, this golden level. If this doesn't hold, it's likely to drop more and bounce and then keep coming down. That's what I'm expecting. Now, I actually didn't talk about this. Here's the scary scenario as well. There's a head and shoulders structure potentially. It works out in some cases. You get that kind of structure. And if you see that come down, if this comes all the way down like that, and we do find support because we've got the fibs and we've got previous levels, I suppose. If we get a bounce there and a support there, I'll be ready to go bearish. Or I'll be out. That is bearish already. If it comes down and finds support around that level, and then we can get bounce, this is going to be resistance, and maybe it goes higher. But that level I'm looking for, left shoulder, that could be the head, that could be the right shoulder, and that could play out as well. That is very common. Let's see if there's another place that we can look at. See this scenario here. This is like you get a nice move to the top. 1, 2, down. I'm not saying it's going to do that. I'm just looking at this structure. You got your levels. And if you see how those levels play out. So that's our top. That was a previous candle, the daily. So when it drops the daily, it could bounce up, but you know it's bearish from then onwards. Look at that. Because we've broken the daily level. And then obviously the weekly. And this is an ugly one, but I'll show you what took place. I recall these lessons learnt from the past. That's an ugly head and shoulders, basically. If we were to go into a smaller time frame. But this is our left shoulder, that is our right or head, and this is that's our head and that's our right shoulder, and you can see that play out. So besides the COVID incident, that played out. So that head and shoulders played out. And if we go to our current scenario, just keep that in mind that it could play out. This could be a real reversal structure. Not enough bulls coming in. I don't know what happened in the past that did that, but that was a main resistance. 10K, I think it was. So this was a main resistance for many years. And you know what? this is a main resistance as well. This is a significant resistance level. So getting a head and shoulders in a different formation is definitely there. And are we likely to? I don't think we'll drop like that, but it could mean that. See that reversal? We had a reversal here pretty clearly. A nice reversal structure. And we did our exhaustion and then came back down. And then came back much deeper. So this was a COVID event, so a black swan event, but this would have been, if given the chance, it probably would have come to hit this level. Not so hard, who knows? But that was definitely not given the chance. I wonder what would have happened. That would have been a good example. So that is a bearish scenario, guys. And where it lands, no idea. So this. Do you think it goes below 23K? I don't think it'll go below 23K now. I think there will be a demand. I don't think it'll go below 23K now. But you got to see the response from the 23K to say that we can't. It doesn't matter what I think. I think that's a good area to buy. Now, would that be enough? Because is this enough? Is this a nice reversal? Would it continue on? At the moment, we don't know. Now, this is the thing that I was speaking about. Hold on, here we go. The market. Whoops. Sorry, guys, that's my UPS kicking in. The market is pricing 24% chance of 50 basis points. So that is tomorrow, I think, isn't it? No, it's not tomorrow. So they think the market's putting this in for a 50% increase for interest rates. Futures are now seeing 20% chance of 4 more rate hikes this year. So when they look at this, it's bearish for the markets. So the markets are pricing that in. And when the figures come out, hopefully it's not bigger than that. Because if it's bigger than that, then the market's going to drop more harder. Yes. So when we look at this structure, this was our head and shoulders that played out nicely. That was our left shoulder. That was our complex head. And this was our right shoulder. That played out perfectly. I think it was like that. Oh, my UPS, come on, shut up. There you go, shut up. So that played out perfectly. Now, this structure looks bearish. It doesn't look good. It's really struggling to get up. Like you can see it. But yeah, but the question is how much would it go down? It's actually dropped below that level. Yeah, I still see it coming down to 23,300 or so. Might do slightly higher. It's very hard to tell. It's not doing anything at the moment. Jack all. No urgency. Just like the SP500. This has got no urgency either. Yeah, that's good. That's dropping. That's a bit of a slight rejection. Actually, let's see what happens to ZIL. I was longing that. I bet you I'm stopped out now. Nah, still looking good. Guys, I reckon ZIL's a good one. Still holding its, like, it's really, really wanting to go. Look at it. Just winding up to go crazy. It's done that in the past, but hopefully it doesn't drop. To go really crazy. It's just trying to get above this level. Bummer. So I've got a long on ZIL. Not stopped out yet. Actually, let's look at Aptos. Yeah, that doesn't look good. However, this could be a continuation pattern, but unlikely. Let's see that this is likely to drop, guys. Maybe like that, like that. Let's look at optimism. Optimism looks better, has a better chance of, but still not the best. Again, Iron Climax, double top. So is this a continuation pattern or is this a topping off pattern? The fact that it went that high is pretty good. And this is what I hate about the Wyckoff charts. You can't tell by this. 236, holding it up. Yep. Yeah. So that's double top. This, I think this fits into one or two models. Still, that'll be still a nice area to average in. But it wouldn't surprise me that it does this as well. Or something lower. Probably just there. And then come back down. And then that doesn't look good. That'll be watching there if that happens. So when you look at them, a lot of the coins aren't the best shape. They're not. They've overperformed. Stargate, Chainlink, what are you doing? Obama. Chainlink's giving me the shits for a while. It's just like, make up your mind. It didn't go. Is it continuation, distribution? No idea. So there's our golden pocket, I think. We don't want to lose that. And the other one, if we do that, yeah, I think that's a golden pocket there. Yeah. I'm shorting Dot and Matic. Where's Matic? Something to tribute. Okay. Matic, where are you? Oh, bummer. I'm shorting, but I'm also longing with my spot trades. That was a nice continuation pattern. This hopefully keeps going. That's a 4-hour chart. Let's look at the 8-hour and chuck in our indicator template. MACD is definitely bearish. Well, you can see those moving averages playing its role. Matic, I would like to see a bounce there. $618, yeah. If we get a bullish candle, it could be an entry. At the moment, there's no reversal candle there, but it's at a good level to go long. Doesn't mean it'll go much. Might just, but this does look like a good entry. Previous resistance, 618 level, so that should be a support with the Fibonacci and the moving averages. We are on the this looks like a good buy to go long. What else is there? It looks like so okay. Looks concerning. It BTC can't hold 24 hours. Will probably go stop my longs. Yeah, played safe. The thing is, can it be a fake out? This dictates it. Even if the whales have a plan, this dictates the plan, unfortunately. So we had this. You can see this really. Look at that. That is a trend line, but will hold. I can't trust it. If this could get a bullish response, it might be enough. But this is also very bearish as well. You could, I doubt it. I can't use that. In many cases, this takes place. So what happens is you get a bounce. You get a bounce and then just dumps. So look for that level, previous level. So this level of interest, if we get a bounce, we need to get above it, because if it goes like that, that's nasty. But there's a lot of people have been talking about being bearish, the market's going to crash, and they have all good reasons for it. But does the Fed dictate all that? Don't know. You don't want to miss out on good trades. That's the thing. If you bought long, have your levels, plan out your levels where you exit. That's all I can say. I've given a rundown. Watch this rundown or this video where I explain that that is our trend, the weekly trend. So we've gone up. This is the lower lows on the weekly, lower lows, and this higher lows. Is it higher lows? Yep. Is it lower high? Yeah. I keep mixing the terminology. So that was our last weekly high, and we've broken above it. So if we lose that level, that's definite. But there's this weekly level there. So our trend is upwards. We don't want to lose this weekly lower high. We don't want to lose that. So if we've still got a fair bit of time. So if we look on the 2-day or 3-day, maybe that will give us a bit of an early notice. So no, it's still the same. So the 2-day one was it 3-day is that level there. 2-day, again, no different. Doesn't give us anything besides this level here. Now we've got this 10 and 20 moving average. It wouldn't surprise me that, again, the 20 moving average or the 10 come into play and we get a bit of a support. Previous level right there. So that's a nice level there again, about 23K. And then up. Now, this level is just difficult to gauge. You've got to just watch it and then decide this could wick back up. All the best. And it really depends on what this does. It's starting to look good. If we could get just past that level, then what we can do is plan. So there you go. That is our key level that we need to pass. Previous support, 618. We need to pass that level. So if this goes up, we want to see it go up like that. Bit of a, maybe a little, if it goes strong, even better. Then we've got that level. And so on. Still looks all right, but you just got to wait and see. But I think we're going to move from here up. I don't think we're going to just drop. It doesn't look like that's going to happen. It's more likely to go up from this level, just the way the candles are structured on the 4 hour. We've got two greens, and we've got 1 hour for this green to close. So until that candle's closed, I will not make a move. We've got 1 hour. So we're looking at the 4 hour chart. We've got 1 hour to close this candle, and we want to see it close higher than this level. So if it closes higher, then it's going to give us a good chance. Yeah, it might come back down, but it's likely to do that. That's the immediate target, short or immediate resistance. And then we've got to see, does it do that? We don't want it to see this, though. We don't want to see it as a wedge. Descending wedge, no. See? Yes, yeah, we do. Could make it. Could make a case for it. Definitely there. If this was, can we make a case for it? Maybe. That would be nice, wouldn't it? A descending wedge breakout. Anyway, let's see if that works out. If it gets a rejection there, there's no other trend line that could be reliable. It might just make that the second touch and then break out. Anyway, short-term bit of bullishness. Watch the hour time frame and the 4 hour time. Yes. On which coin day? So that's a 4 hour. It looks good. It just engulfed 3 candles. I still like the 4 hour. So 13 minutes for the 1 hour. Looking bullish. So Bitcoin should be moving, right? Nothing on Bitcoin yet. Just a little bit. Why is this not automatically? Again, that's where we're going to look at potential resistance there. So this is, we need to break above that. If we break above that, guys, that's when you go long. I think that'll be the level. You can probably put some orders there, but we're definitely in the range. It's not the best range. I don't like that. Let's see if we can find anything else that supports us. All right, so that trend line does help. And got 10 and 20 moving average. Let's see what that does. Okay, breaking the 10 and 20 moving average will be good. And if we look at any indicators, on the 1 hour. Yeah, maybe. Let's just try that. If it breaks that, come on. If it breaks that, that might be a good sign. We want to see a bullish divergence kick in. There's none there yet. Oops. I would look at that trend line, 10 and 20 moving average. I'd like to see a bullish divergence. So it's still early. It might just, if it still does that, that would be nice. That'll show the bullish divergence kicking in, and RSI might be something like that. I don't know. We'll see. That's a 1 hour. Let's look on the 4 hours. It's too early. Yeah, there's nothing there on the 4 hour except that it's dropping. Oh yeah, that's pretty clear. Look at that. That was our level to get out. And this is, look at the bearish divergence. Significant on the 4 hour. That was an exhaustion there. Look at the bearish divergence. Still, like when you lost the 50% level, so our RSI 50% was right there, and you can see how it just dropped when we lost 50% of the RSI on the 4 hour. After, and you know what? That was a 10 and 20 moving average. Became resistance. Perfect. So change of 50, yeah, losing the 50% level is pretty much a deeper pullback. Let's look at the 8 hour. 8 hours also lost the 50% level, ever so slightly. But the date is nowhere near. Yep, nowhere near yet. But definitely, even on the daily, you can see the pattern. That was the line. As soon as we break that line, so this was a bit of a, yeah, it doesn't give you the chance. So let's look at 12 hour. Yep, 12 hour. That was the line and the level. So when we lost that, got to keep watching these bloody things, getting the right time frame. But that was it, right there. The second candle. That was dropping that level on RSI, and it went down. It's near the 50% level. I still feel like it should come down a bit more. And if we look at MACD, yep, bearish divergence crossing over. So really, we got 6 hours to see how this closes, this candle. We don't want to see this MACD cross over. If it could bounce off it, it would be great. Something like here, crossing over. That's a nasty one, but that's what I got. Coinbase shared the date of tomorrow. I'm not sure what that means. What's the time? It's not a nice candle, that's for sure. Let's look at the daily. Nice range. Come on, give me a color. So when I look at this, the way they've aligned it, ever so. Yep. So this is our resistance level. That was definitely resistance, so I can't stand that rejection. That is a very big rejection candle. Here's our 618 level. Depends when you entered, but if it loses this level, it's going to come down deeper, because that was a major resistance. It broke above it. So when I say lose it, we're looking at the daily. If we lose the daily here, definitely that will be my exit signal, because that will be deeper. However, there's a lot of support at the next fib level. So in between here, there's a lot of support. Now, one would think it should go up like that more. Another attempt. The structure, I can't make anything of the structure. It's not the best shape. That was a nice move. Again, if you lose that level, you lost the previous top. So that's dangerous. If you go to a 4 hour, it looks like it's going to drop. That was a level. It's still got support, but you can see how the Fibonacci's were nicely aligned with this. So I would look at from here. But also, yeah, so it's coming to the demand. So there was demand here. So, but this is bearish, man. This is bearish. I wouldn't expect this to go. It's probably like, look at this. That's a big volume. It's not bad volume or dropping, but it's dropped a lot. That's what is it? Anything, I always say 20% or more is a reversal. Not yet. 15%. 20% to 25%. If it drops, yeah, that's a lot. But then it's done. From a Wyckoff perspective, it doesn't give me anything. This formation is just ugly. So that's it for me. Okay. Yeah, what does it say though? It's a big company, isn't it? Can't remember which one it was, but they were saying the same thing about. No, I don't know where it is. Bit of a thing. Let's see what the bubble's telling us. So, past 4 hours. Dodo, okay. That's past 4 hours. Past days, everything's red. FX, okay. Dodo's, okay. Dodo's, that's 16%, and then it's dropped. Yeah, so everything's really in red, but everything slowed down on the 4 hours. That's it for me, guys. Hopefully, if you missed out, just rewind it and see my levels, my justification. I've walked through a bunch of scenarios, so it's all there, bearish and bullish, short-term and long-term scenarios. Mate, no one's going to know. No one's going to be able to give us any insight to what's going to take place, and no one can guess that. You can guess the big moves, but until the results come in from the economy and the government policies and Fed, nothing's going to change it. This is what we can only go with. So look, we've got a rejection on this P500, so that level hasn't passed yet and hasn't closed. So this is the 1 hour. So we're still ranging, and I would think that Bitcoin will do the same. Let's see what it's doing. There you go. So it's found that resistance level. And Ethereum. Should I buy some? Should I get some profit? That's the thing. It's got to do a lot of work to get back up. Okay, it's possible. I might just take a little percentage of profit from here. Because I entered late. I think I entered around here. So that's where I entered. Take a bit of profit.